On this episode of the Connected Investors podcast and YouTube show, Exactly How, we're going to show you how to make a fortune using the infinite banking concept. We'll break it down into 3 steps, figuring out what is the infinite banking concept, how to use it, and how to profit through infinite banking on this episode of Exactly How.
You're listening to the Exactly How podcast, where you'll hear the underground, closely guarded wealth-building secrets of successful people around the globe. Discover exactly how to improve your mental, physical, and financial health. Feel better, make more money, live, give, and prosper in today's exciting, fast-paced world filled with opportunity for those who know exactly how.
Welcome to the Exactly How podcast and YouTube show, brought to you by Connected Investors. During this episode, you're going to discover exactly how to use the infinite banking concept to your advantage when investing in real estate. Now, for those of you who are new, my name is Sean Young, today's proud host and member of the Connected Investor community. Before I introduce you to our next incredible guest speaker, I want to make a request that if at any point during the show you like what you hear, please give us a thumbs up so that you can subscribe to the show and not miss an episode. And make sure to take a look at the notes in the description of this episode, as we've packed it with thousands of dollars in free resources. Now today, we have the privilege to learn from a man who helped his client earn over $400,000 with one deal. Now, prior to his career in real estate, he was a consultant at Allstate. But all that changed when he read a book that altered his life. I would describe our next guest as determined. I'd like to introduce you to the one, the only, Siri Ibrahim. Siri, thanks for being a guest on today's show.
Hey, Sean. Thanks for having me on. I appreciate it.
Absolutely, absolutely. So before we get started, Siri, can you tell our listeners out here a little bit about yourself and about your background and where you're from?
Yeah, definitely. So I'm from Chicago, Illinois. I grew up here, lived here my whole life. And yeah. And what I currently do is I'm a financial planner, and I'm a member of the Bank on Yourself organization. So we work with financial products, specifically dividend-paying whole life insurance, mainly for real estate investors. That's our primary niche. And we also work with business owners, full-time employees, but we've kind of niched down to real estate investors. And that's what I pretty much help with. And I'll definitely get into more. And just for the listeners to know, the infinite banking concept is the same as the Bank on Yourself concept. So I'll kind of use those interchangeably.
Okay. Awesome. Awesome. I'm definitely looking forward to today's show and learning all about what you have to share with us. Now, before we dive into exactly how to use the infinite banking concept to your advantage, Siri, you contribute a lot of your success to allocating 15 minutes a day towards something like reading a book. Why do you think this has played such a huge success in your life?
I think it's helped me a lot because as humans, we're creatures of habits. So I think habits can automate our lives, So if you do something for 15 minutes a day, reading a book or whatever it is, running, it becomes a habit, and then you end up getting really good at that habit, and it ends up like becoming a part of your life. So I think it's really important just to kind of do something like really productive, like 15 minutes a day. It doesn't have to be a lot of time, doesn't have to be a lot of effort, but every day, because it becomes a part of your life. So that's why.
Absolutely. That makes a lot of sense. Now, guys, what makes the Exactly How Financial Freedom podcast and YouTube show unique is that each and every show comes with a detailed action plan. We pull the steps out of each show and create a blueprint on how to implement exactly what we're covering. All you have to do is visit connectedinvestors.com/free to get the key takeaways, the resources, and free gifts that Siri has generously allowed us to give you all today. Plus, you're going to get our free training right now. All you have to do is text the word exactly to 910-600-0630. Again, text the word exactly to 910-600-0630 and see for yourself. Now, this is exactly how I make my money. You guys can find properties for pennies on the dollar using this software that I use each and every day. Now, as nearly 1 million people know, Connected Investors is a social network of real estate investors, and it's a marketplace for investment properties. In the description of this video, I've included a link to this episode's forum discussion. So Siri, let's dive back into the steps. And before the show, we discussed and broke it down into 3 steps on how using the infinite banking concept to your advantage can be a plus for you. And that first step that we came up with was becoming familiar with the concept. Can you break that down a little bit more for us, Siri?
Yeah, definitely. So it's really important. The first step to get involved in the infinite banking concept process is to understand what the concept is. And there's a lot of ways to learn. You could go to YouTube. You can go through podcasts. You could even read some books. A couple books I recommend. One of them is Becoming Your Own Banker by Nelson Nash. A second book is The Bank on Yourself Revolution by Pamela Yellen. Both are really good books. So if you like to read, so kind of figure out which way you like to learn, either reading, listening to podcasts, or watching YouTube videos. But learn the concept, become familiar with it. That's pretty much it. With the first step.
Okay. And that brings us to our next step, which would be scheduling an intro call with your firm.
Yeah, definitely. So if you go to finassetprotection.com, there's a calendar link. You can book an appointment with our firm. All our consultations are free. And you could book a 15-minute appointment. We could do it over the phone or over Zoom if you like to do a video call. And this is pretty much, we want to just see if you're on the same page with what we have in mind. We want to make sure like you've kind of researched the infinite banking concept or the bank on yourself concept. You have an idea of what to expect. Because we just had people call before and schedule appointments that are looking for simply like loans, or they're looking for like other things. We work specifically, even though our clients are mostly real estate investors, we work specifically with the infinite banking concept for real estate investors.
Understood. Well, that's awesome. And that takes us into step 3, which is, go through a financial analysis.
Yeah, definitely. So Sean, there's a lot of different companies out there, and then each company has different products, and each one of those products has different funding amounts. Some of them can be funded, monthly or annually, or a one-time payment. So it's hard for us to kind of judge which product and company would be the best for the client. So it's really important that we do a thorough financial analysis that gives us a more thorough idea of which company and which product and which amounts would be most feasible for the client to meet their financial objectives.
Gotcha. Well, Siri, let me ask you this. Let's say an investor comes in, they've been investing for a year or two. They've got some change in the bank that they're wanting to do something with, or they're not really knowing what they do. Do you actually help people with that as well? Like if they, reach out to you, can you help guide them into, they might not have a clue on what they really want to do. Do you got help with that as well?
Absolutely. Yeah. The financial analysis helps us uncover like all their assets, all their properties they own, the values, outstanding loans they have. And based on that, we put together a proposal or a solution that could help them get to their financial need or their financial want, So absolutely. Yeah, definitely. If you don't know what to do with your money, yeah, we could definitely help you with that.
That's awesome. That is awesome. Well, guys, as a reminder, if at any point in the show you like what you're hearing, please give us a thumbs up or subscribe to the show so that you never miss an episode. It's your engagement that keeps us doing this for free for the community. So, Siri, what do you think your life would be like if you had never read that life-changing book and you were still working as a consultant at Allstate?
I would never think like a bank. I would never think like a large corporation. I would just kind of use banks and use Wall Street to help me with my wealth, but I would never think of a way to create that own source or to own that source of financing. And that's pretty much what the bank on yourself concept is. It's a method for you to become your own source of financing and for you to pretty much have control over your money, regardless of economic conditions and regardless of loan decisions by banks. You never have to get underwriting for loans from the insurance company on your life policies. You always have access to those. Okay. So I think if it wasn't for the books, I would have never realized that one could even do something like that.
Well, yeah, that is definitely amazing. I know a lot of folks out here have life insurance policies, even myself, of course. And, I've heard, this is maybe the second time I've heard this concept. But it definitely sounds really interesting, how you're able to utilize your insurance policy in some way to use that as investment capital.
Right. And Sean, it's important for the listeners to know that not all life insurance policies could do this. There are some specific things to keep in mind. Like number one, it has to be whole life insurance. It won't work with term or universal. So it has to be whole life because whole life has a cash value part as well as a death benefit part.
Okay.
And then the second thing is that it has to be from a mutual insurance company, not a stock-owned insurance company. Mutual insurance companies give dividends and profits back to the policy owners, whereas stock-owned companies give their dividends and profits back to shareholders. So it has to be a mutually owned whole life company. And the third part of it is that it has to be non-direct recognition as opposed to direct recognition. And what that means is, let's say, Sean, you have a whole life policy, right? And let's say you have $100,000 in cash value in the policy. Now, let's say you're a real estate investor, you come across a deal that requires you to invest $50,000 into the deal. You have a couple options. You can go to a bank, you can go to a private money lender. You can also go to yourself to borrow from your own money. But the difference is that when you go to use that $50,000, you're not deducting from the $100,000 cash value. You're borrowing from the insurance company's general funds, leveraging your cash value. So what happens is that on your $100,000 cash value, it continues to compound and continue to earn interest as if you've never touched that money.
As if it was still at 100.
Yeah, you still be at 100. It'll keep growing. Now, when you take out that $50,000 loan, you have an agreement now with the insurance company that you can control. It's like a personal loan. The insurance company gives you $50,000, and these aren't specific amounts. Just to give the listeners an idea of how the loans work. Now, let's say with the policy loan, there's going to be a simple interest rate of 5%, and you pay that back. Now, let's say after you pay back that loan, you pay like $53,000 total. So principal plus interest comes out to like $3,000, $53,000 total.
Mm-hmm.
The listeners might be wondering, like, why am I going to pay interest on my own money? The reason why is because on your $100,000 cash value, it continued to climb and continue to earn interest. And maybe after like 5 years, depending on the rates and everything, after like 5 years, it might reach a point where it's like at $165,000 in cash value. So now there's a split between you earning $65,000 and paying back $53,000. So like an arbitrage of like $12,000. So you made money in the policy. And then back to the $50,000 you used for real estate, you most likely, hopefully, made a profit on that too. So your money worked for you in two different places. This is exactly what banks do. So banks use whole life insurance, and then they borrow from the funds from the insurance company, and then loan the funds out via credit cards, auto loans, home mortgages, lines of credit, and then they earn interest from those, from the customers and from the insurance company at the same time. But in order for you to do that, it has to be non-direct recognition. So when you borrow the money, you're still earning interest and dividends on your cash value as if you've never touched it. If it's direct recognition, you'll be penalized for using those loans. You won't receive as much dividends or as much interest if you didn't take out the loan. So you want the non-direct recognition, so that way your money grows uninterrupted.
Awesome. Sarry, this is some awesome information. Guys, are you listening to what he's laying down? I mean, this is very powerful, especially if you're wanting to take your careers or your investment to the next level or have other options. I mean, this sounds like the path to help grow your money. I mean, this is awesome. Sarry, let me ask you a question. You said it only works with the whole life policy. What if someone has a term policy? Can you switch to a whole life policy, or is that something that usually can't be done? Yeah,
you can. Yeah, there's ways that you can convert from your term to the whole life. And this is what we do too in the financial analysis. We ask about life insurance, current life insurance. And if we do uncover there's currently term policies, we'll try to go down that angle where we can convert it over to a whole life. But it depends on the company. It depends on how long they have the policy for, but definitely we will look into that to see if we can get it converted into a whole life.
And the whole life, is that for our listeners' benefit, and even for my inquisitive nature, would that be a higher policy, premium policy, a whole life policy versus a term policy?
Yes, it would. Yeah, on average, whole life is about 5 times the cost of term, and it's mainly because it's permanent; it never expires, and because you have the cash value buildup of the policy. And because the fees in a whole life policy are typically the highest in the first 2 years, but then start to decline as the insured ages, the insurance company takes into account those costs. But the way we structure the infinite banking concept or the bank on yourself concept, the way we structure whole life policies, there are ways where you could break even with your money, where your cash value starts exceeding what you're putting into the policy, maybe around year 4, year 5, which is really good in the whole life insurance world, because a lot of people don't like whole life insurance because they assume it's old-fashioned whole life insurance or traditional whole life insurance where it has no cash value, or very little. So they see it as a very low like ROI or very low return on your money. But the problem with that is they're referring to, a whole life insurance from over 100 years ago, which is structured differently. So the policy, so back to the whole life insurance, how it's structured, it has to be mutual, it has to be whole life, it has to be non-direct recognition. The policy also has to be structured properly. What that means is there has to be, so every time you invest or pay into the premiums into a whole life policy, a portion goes towards the death benefit and another portion goes towards the death benefit, towards the cash value. Let's say you're building a home and let's say you wanted to allocate like 2,000 square feet for this home. If you put in 2,000 square feet entirely into the base, you're going to have a really huge basement, right? You're just going to have a basement only, nothing on top. But if you did it like more strategically, more of a wanted house where it was 1,000 square feet in the base and then another 1,000 square feet on top, it's still 2,000 square feet, but it's structured differently. Same thing with whole life insurance. If you were investing like $10,000 a year or saving $10,000 a year into the policy and it went all into the base of the policy, into the death benefit, you're going to have a really tiny amount of cash value, which is not going to be favorable, especially for real estate investors who are always looking for liquidity. Rather, if the policy is structured properly, maybe you might have 5,000 going towards the life insurance part and another 5,000 going towards the paid up additions rider, which is the cash value part of the whole life policy. And that's what turbocharges the cash value. That's what creates that increase in cash value that you could use to become your own source of financing.
Awesome. This is great stuff, Siri. I really appreciate you breaking that down for our audience and our listeners out there. All right, Siri. Well, that brings us to the part of the show that's called the rapid fire session. And this is basically where I ask you about 10 questions and you just give me the first answer that comes to mind.
Okay, ready.
Awesome. On a scale of 1 to 10, how strict were your parents?
7 out of 10.
Okay. Get up early or stay up late?
Early.
How many hours of sleep do you get per night?
8 hours.
Favorite or last book read?
Mindset by Carol Dweck.
If you could be any superhero, who would it be?
Batman.
Okay. Something everyone should do less of?
Social media for fun.
Smart. Something everyone should do more of?
Read books. Love reading books.
Bitcoin, bang or bust?
You got me there. I'd say bang.
Okay. Will people live on Mars in your lifetime?
Probably not.
Okay. Awesome. Well, I really appreciate that. I mean, great answers. And guys, you've all made it to the end of the show. And as we know, most people never finish what they start, so you're special. Now, if you got any value out of the show today, please share it with a friend, share it on your Facebook page, like this video, subscribe to our channel, and send us topics that you want to learn more about in the future. And like I said earlier, nearly 1 million people use the Connected Investor social network and marketplace to connect. Now, in the description of this episode, I've included a link to this episode's discussion forum. Tap that link, ask me and other pros questions in that forum, and see what other investors are saying about this particular episode. So guys, until the next episode, you can catch me on the inside of Connected Investors. See you on the inside, guys.
The Connected Investors app connects you with investors, notifies you of available properties, helps locate cash buyers, and secure private funding to close deals. Set up in seconds to become a member of the Connected Investors social network. Now you can scroll through your main feed to find cash buyers, see investment properties not available to the general public, and network with investors by adding your own comments to a thread to keep the conversation going. The Control Center is your connection to add properties to sell, start new discussions, connect with local investors, and even find private funding. The Notifications tab will keep you alerted to new investment properties and offers. You'll also find new friend requests to connect directly with the community to build your network. From the property marketplace, you'll be able to find, favorite, and make offers on investment properties. Download Connected Investors today to find, figure, fund, and flip investment properties on the go.